The top story that we are tracking here is the gold prices. Gold, the precious metal, the yellow metal, appears to have become more dearer. It has inched to 64,000 per 10 gram mark, came down slightly last evening, but the demand is unabated.
What do you do with 4 lakh weddings happening, Shweta, in one city, Delhi NCR? 4 lakh weddings in this wedding season, a short one, about a month or so. Obviously, Indians love their yellow metal and are going ahead and buying gold like nobody's business. But that is as far as the India story is concerned. Obviously, there is a large demand for gold, and this demand starts right from the season of Dhanteras going up all the way to Diwali and now the wedding season. So this entire last 2 months and continuing for another 1 month from now is when we will see domestic demand for gold continuing to soar, and that is going to keep prices of gold obviously on a boil. Now, what is happening internationally is a slightly different story. Now, the Fed commentary which came in suggested that there could be rate cuts in the interest rate cycle, which has been at an elevated level for about 20 odd months now. There could finally be some signaling of a rate cut in the US. Now, what is that going to do? When the rates were hiked, you saw money flowing out of US stock markets and going into the treasury bonds. And then we saw treasury yield, breaching the 5% mark. Now, if there is going to be a rate cut, people don't see too much value in investing in treasury bonds. And gold continues to be a safe haven. So money is getting pulled out of the US treasury and going back into the yellow metal. But the dichotomy that comes to mind right now, especially in the Indian context, is that the old adage says that when stock prices are high and when stock markets are on a bull run, gold is usually down.
That is
and the reverse is when gold prices are high, the stock markets come down. So only when markets are not giving you enough return do people pull out money from the markets and invest in gold. And when markets start giving better returns, people sell their gold and invest the money in stock markets. But what we are seeing right now is a sort of coupled momentum both on stock markets and gold prices. They are both touching all-time highs. So gold at 64,000 rupees per 10 gram at an all-time high. Sensex at 69,000 plus points this morning at an all-time high. So that dichotomy is difficult to sort of comprehend right now.
All right, and look at that chart of gold prices. Gold that was at, it's been evenly going up since 2019, come to think of it. June is when we saw a slight dip, June of 2022.
That's right. That's
and
right.
from 2023 onward, the trajectory has remained.
So again, if you look at 2020, maybe around March, which is when the stock markets had crashed, you saw gold had inched up to its then lifetime high of about $1,650, $1,700 per ounce level. When the market started picking up again in July, August onwards, you saw gold going down. And that trajectory is easy to map all through until perhaps, the last 1 month or so that we are seeing gold is inching up and so are the markets. Now, this in turn, because India is a gold importing nation, there is obviously pressure on the Indian rupee. And we've seen that while stock markets are at all-time highs, gold prices are at all-time high, rupee is at an all-time low. So there is more selling of the rupee or using the rupee to buy gold in international markets, and that is adding pressure on the rupee vis-a-vis the dollar, and the dollar continues to strengthen while the rupee is weakening on account of this demand of gold.
All right, so all those who are looking at gold prices today, knowing that they are in a very high range territory, should they be buying or not buying? What are the experts and analysts out there saying?
Right. So, Shweta, I mean, you and I are not the best experts to give financial advice to anybody, but what analyst views are also mixed. There are many analysts who are expecting this surge, this rally in gold prices to continue. And this is going to further get augmented if we have a clearer sort of deadline of the US cutting rates. Until then, in anticipation, people will continue to pull out money from US Treasury and continue to invest that in gold. So in the short run, another few days of lifetime highs of gold may not be ruled out, right?
Okay.
But at 64,000 odd levels for 10 grams in India, gold is already very expensive. So those who are looking at investing in gold for returns, some sort of assured returns over a 6-month, 1-year, 2-year horizon, may want to actually go back to a financial advisor and check how much of their portfolio, how much of their asset allocation right now should include gold. because there are other analysts who also fear that once this wedding season is over and once this abnormally high demand for gold tapers out, you may not have gold cross the already very high levels.
Right.
So from an investment perspective, again, because India being a gold importing nation, there is an import duty that we pay on gold when you're buying physical gold. In addition to that, there are making charges. On those making charges, there is GST. So when you want to invest in gold, jewelry, and that is something I think most financial advisors, most analysts happen to be in sync with that view, that if you want to look at gold as an investment route, then jewelry is not the product
best way of
and
investing.
the best.
So that
best
begs
vehicle.
the question, what is the best way of investing in gold?
So I think gold ETFs, if you want to regularly trade gold and try to make some money off trading gold regularly, gold ETF is something most financial advisors are big proponents of. And in addition to that, there are the sovereign gold bonds, which in addition to the appreciation of gold year on year, also offers a 2.5% interest rate over and above the appreciation. And add to that, if you were to hold the SGBs for the whole duration of 8 years, then the returns that you get by selling off those gold bonds are also tax-free. So overall, no tax, no short-term gain, no long-term capital gain, no addition to income tax if you hold the SGB for 8 years. So a tax-free sort of, you get all your money, the appreciated money, and you don't pay taxes on it. And then a year-on-year 2.5% interest rate. So SGBs continue to be one of the favorites of gold investors.
And let's also take that question to Kunal Shah, Head Commodities Research. Nirmal Bang joining us on the show. Kunal, thank you very much for taking time out. Good to have you on the show. In line with what we were discussing, is this the right time to buy gold? And if not, should one wait for the prices to go down? Is that likely to happen?
I don't think so. There's going to be a major downfall in gold prices. The outlook on gold for the 2024 and even for the next 2-3 years continues to remain bright. The matter of fact is that the kind of problems global economy is facing on the geopolitical front, with every passing day, the geopolitical scenario is continuously worsening. Second, on the monetary policy front, we are not going to see any aggressive rate hikes from here. So over a period of like 6 to 8 months, the likelihood of the US interest rates or the interest rate in other developed part of the world is likely to edge lower rather than inch up from here. And the third most important reason, central banks are net buyers in gold from last 3 years, and they will continue to buy gold because there is no other instrument where you can diversify your foreign exchange reserve, because nobody's buying US treasuries. Each and every country is shifting away from the dollars and trading in their own currencies. So de-dollarization process is actually picking up at a rapid pace. So the volatility is going to be there. There is going to be a bouts of correction, bouts of upside, but the eventual trend in gold continues to look very strong. And I recommend you can buy at these levels, 62,000 around. You can go long in gold. Next year, the likelihood of gold testing $2,400 on COMEX and 68 to 69,000 rupees on India is very high.
Okay, Kunal, I wanted to understand the sort of dichotomy which is playing out, in commodity prices vis-a-vis gold in particular, vis-a-vis the stock markets. Usually there is suggested that there's an inverse relationship between stock markets and gold prices. But for once, we are seeing that they are both at all-time highs and the rate of growth in both is almost similar. You have Sensex breaching the 69,000 level today, and you have gold at about 64,000 rupees per 10 grams. That inverse relationship seems to be history right now.
I think this is a very good question, and the answer to that is the world has changed post 2008 crisis, and world is even drastically changed from 2021 COVID crisis. So the kind of liquidity infusion which has taken place in the global economy, I mean, can you imagine the kind of $5 trillion were printed in a matter of 1 year and was given in the markets, and this money is causing all these sort of irrational exuberances. So right now, with the higher interest rate, gold is rallying. With the higher interest rate, stock markets are rallying. With the higher interest rate, bitcoins are rallying. So this is not going to make, this is not making the traditional economic theories are big question marks. So if you learned, if you are a graduate from one of the top B schools in the world, and what have been taught to you, the markets are not behaving. Whatever central banks did in 2020, 21, in 2008, post that, the entire equations, the traditional economic theories are at toss right now. So it's absolutely right. It's because of the central banks printing irresponsibly at the time of COVID. This kind of irrational exuberance is taking place in the market, and this is not going to go away. We are not going to see central banks deleveraging their balance sheet to the levels what they have done post COVID crisis. So balance sheets are not going to deleverage, and hence this kind of anomalies will continue to remain in the market.
Okay, and Kunal, talk to us also about the kind of pressure that the Indian national rupee is going to face vis-a-vis high gold prices. So we already have the rupee at an all-time low. And if, in your assessment, gold could breach the $2,500 per ounce mark, then that is bound to have added pressure on the Indian rupee.
Well, I think Indian rupee, the fiscal scenario, one of the reason for one of the reason why rupee is weakening is, one of the reason is gold. It's not just attributed to gold. India is growing at a rapid pace right now. We are adding $350 billion of GDP every year with the kind of growth. So the imports are growing up. The import bill of our country is growing up. Exports are picking up, but not at the same pace right now. So yes, we do have a pressure on our rupee, but I believe going forward in year 2024, the depreciation sounds quite limited. I am not expecting Indian rupee, USD INR pair to go about 84, 84.50, but gradually rupee will appreciate. So it's a slightly contra call from my end, because I'm expecting dollar index to significantly weaken in 2024. So rupee should gradually strengthen, USD INR pair, and it should test 82, 81, 80 and a half. That's our forecast.
Okay. And for somebody who is literally looking at gold right now, not to buy jewelry in the ongoing wedding season, but purely as an investment tool, should there be a change in the asset allocation percentage for gold? And if so, then what should be the best instrument in this market scenario to go ahead and invest in gold?
Okay, I'll just answer your question by indicating what China is doing. So after the irresponsible printing, China has been aggressively buying gold. Every month they are buying 25 to 30 tons of gold, and they are the world's largest producer of gold. So it's all about having a goal. It's a strategic investment right now. So say 3 years down the line, if there is a global central banks meet and they say that how to solve this problem, the only way, it's like working something out. You cannot just print currency like anything. It has to be backed by something. And if this kind of standard, gold standard again reappears, then I think gold is going to go to roof. So only thing which is truth right now is gold. Rest, all the liquidity related inflated asset bubbles are going on. Gold is actually fundamentally one of the strongest asset class right now. Even at these level, I recommend that you should have it in your portfolio. Even if I go wrong, if my view go wrong, I'm pretty sure the downside is very limited. So it's a strategic investment, and it's must in your portfolio right now. And 15%, 18% of your portfolio should be in gold.
All right, 15 to 18% of the portfolio should be gold. That's the word coming in from Kunal. Kunal, thank you very much for taking time out. Thank you for joining us here on the show.